let me come back to the interest rate question. Is what one factor holding you back is the asset inflation, the perceived froth in the stock markets? Is that holding you back on rate policy also?
No, not so much. I mean, I would not say not so much, but let me say we watch all aspects of the economy, including the stock markets, more from the point of view of financial stability.
Yes.
What kind of spillovers it will cause to the overall economy. So we look at the stock market scenario, whatever is happening in the stock market or whatever is not happening. I mean, basically the stock market scenario, by us, we analyze it from the point of view of, more from the point of view of financial stability. Coming to inflation, coming to rate hike or rate cut, coming to monetary policy, we are governed by our inflation growth.
By goods
dynamics.
inflation. No, I take your point. What I'm only saying is, does it worry you that you should not cheapen credit when the markets seem frothy?
No, I mean, so far as that's what I said. That is, we look at the kind of spillovers, the stock market, or for that matter, any development in any part of the economy, what kind of spillover it will have to the entire financial system and to the entire economy. Whether it is stock markets or the bond markets, or, you know, so many components are there, so many segments of the economy. We look at what spillovers they will cause. Now, so far as the banking sector is concerned, we are very closely, you know, we monitor all banking, meaning the credit sector, or the credit growth, all that is, you know, this segment is concerned. We very closely watch this position. In fact, much closely than it was, you know, a few years ago, much more closely than a few years ago. And whenever we see possibility of whenever we see some early signs, or whenever we feel that a few months down the road there could be a problem in this particular sector or subsector, we act. And an example is the unsecured credit, where we took action last year in November. And we increased the risk weights, and the results are there to see.
Okay, that's exactly what I'm saying. See, the F&O volumes was something that troubled government, RBI and SEBI. And SEBI has appointed the Padmanabhan committee on it. So do you have this fear that bank money could be fueling the stock market rally? And therefore, is there a case for higher risk weights, or even to keep the interest rate, you know, on watch?
You see, so far as bank money going to sort of create some, you know, giving some boost to the stock markets, etc., is concerned, the exposure limits of the banks to the stock market, individual borrowings from, let us say, NBFCs, which were very high earlier for participating in IPOs or for going to the stock market, you know, the IPOs or for FPOs, whatever, even there we have put a limit of 1 crore. It was all done some 2 years ago. It's not something we did yesterday. So therefore, at the moment, so far as from the point of view of the credit sector, there are no major concerns.
Okay, you don't think fresh controls are needed? And
in any case, banks have their own, end-use monitoring. Only some amount of, you can say, some amount of unsecured credit may go into the stock market.
Exactly.
May go. But so far as unsecured credit is concerned, we have already come out with, we have provided for additional risk weights, and the overall growth of unsecured credit has started moderating.
So you don't think more is needed?
That I cannot say. As and when something is, because it all depends on the numbers and the future outlook. So we keep on constantly evaluating. As and when some measures are required, I can assure you that the Reserve Bank will be proactive.
Okay. You're not done with risk weights?
It depends on how the situation plays out.
Okay. All right. Let me come to the other big story where Reserve Bank grabbed the headlines, the dividend. You gave a very high dividend of 2.1 trillion rupees to the government. You would have some desire as to what you want from the budget. Would you want it to be used for fiscal deficit reduction? What would your best ask be? I mean, it's only a wish.
Well, I will not give you the answer which you want, but I will give my answer. Now, so far as the dividend payment is concerned, we cannot link it to it cannot be linked to our expectation from the budget. It is provided in the RBI Act that the surplus has to be transferred to the government. And the surplus has to be transferred after making all the provisions required. and the surplus has to be transferred now. As per the recommendations of the Bimal Jalan committee, we have an economic capital framework.
Yes.
It is principle based, it is formula based.
Yes.
There is a framework for it. At the end of the year, we just calculate, following the guidelines and the principles laid down, the ECF framework, this economic capital framework laid down by the Bimal Jalan committee. We follow that and do the calculation, and whatever is the surplus that comes out, that automatically flows to the, let me complete. So that automatically flows to the government. And so we have, it's not a matter of my discretion or the discretion of the central board of the Reserve Bank. It is principle driven, it is formula driven. So therefore, so far expectations from the government is concerned, let the budget be presented.
No, I'll tell you, it is not, I know you're making it sound formulaic, but you know, as a central banker, if inflation were high, you would not print so much money and give it to the government. Because inflation is behaving itself, it has been falling from the highs, you could give, you apply the formula. If inflation was high, you would not have applied the formula. What I'm saying is, when you give 2.1 trillion, you make life difficult for governors coming after you.
No, I disagree.
It becomes a precedent.
I disagree with you when you say if inflation were, lower.
Yeah, if it were higher, you cannot give such a big.
You are saying that we would not apply the formula. The question doesn't arise. You look at this. The Bimal Jalan committee recommendations came in 2019, in the middle of 2019 calendar year.
Yes.
We applied it for calculation of the surplus transfer for 18-19. For 18-19, the money which was paid in next financial year was 1,76,000 crores. That was the all-time high at that point of time. Then subsequently, if you look back at the last 5 years, after that there was one occasion, I don't remember, when it was 30,000 crores.
Yes.
It was 30,000, 30.
Yes, I remember that.
So how did that happen? 176 did not create expectations. So after that we gave 30,000 crores.
Yes.
And if I again remember correctly, it went up to something like about 99,000 or 1 lakh crore.
1 lakh crore.
But then again it came down to about 57, 56, around that. So therefore, there have been, ups and downs in the dividend payment. So it is entirely formula driven. Whatever is the number that comes out, and no governor will be under pressure. And in any case, there is no such expectation from the government also. The government is fully on board so far as the economic capital framework is
concerned. I'm still trying to make you say something about the budget.
And in any case, as regards printing of notes, the printing of notes depends on the requirement of the larger economy. We don't print notes only to sort of,
What I'm saying is, if the inflation were high,
it has well settled. It has the economic capital framework.
I agree that the precedent may not be.
It has well settled, and the fact that over the last 5 years we have given 176, then 30, again gone up, again come down. It proves my point.
Point taken, sir. But I'm still trying to get something in terms of your wish list from the budget, for the simple reason that deposits are growing by 12%, credit is growing by nearly 16%. There is, a hunt for deposits, and bankers and those who deposit money in banks genuinely feel that equity gets a better tax treatment. There is this capital gains debate that perennially goes on. Do you think that deposits need a better tax treatment?
No, I would not like to speculate on any aspect of the budget. I also would not like to sort of give out what are my expectations from the budget. As I have shared with you earlier and with the media earlier also, whatever suggestions, if at all, whenever we have any suggestions with regard to budget or any other issue, we convey it to the government.
But you don't think depositors,
on the budget, I would not like to,
say
anything.
Okay, even outside the budget, bank deposits are struggling because money is getting drawn into the stock markets. So there is a crib that we are losing because we have a tax penalty.
See, there is an interesting thing of, that you're losing to stock market. If whatever goes to the stock market ultimately comes back it comes back to somebody's deposit.
Yes.
If I am selling the shares and you are buying
it remains in the banking system.
It remains in the banking system.
The time,
so therefore, deposits are not growing. The credit growth is higher. And this is an issue we have been discussing with the banks. Even in my last interaction with the public sector banks and the private sector banks, in fact with the entire banking sector, this issue was discussed in depth between the RBI and the CEOs of the banks.
Okay.
So the banks will deal with this issue.